Hey, what's up, everybody? This is LT, the Capital Guy with Prescott Capital Solutions. And today I want to talk about how to read and interpret the information on your Experian business credit report. Now, if you're just starting out in creating your business credit reporting profile, you may not have a report with Dun Bradstreet, Experian Commercial, or Equifax Commercial. So you may not be able to pull up your report just yet until you start working with vendors, purchasing from vendors that actually do report. But I just wanted to kind of go over some of the information in the report, so when you do start having trade lines report, you'll know how to read. But before we get into that, why don't you guys give me a thumbs up, like this video, also subscribe to the channel and click that notification bell so that you are reminded about any new content that I put out. So just stay tuned and we will dig right in. All right, welcome back. So now what we want to do is kind of just go over a sample report. This is from Experian, and this is just a sample report. It says here this is a fictitious company credit report, and actual reports may vary in the amount of information available per business profile and may not include information seen in the sample. So again, this is just a sample credit report. And what I want to do is kind of go through and go over some of the detail in the report. So the sample company here is LaSalle Medical. Here, you can also see that here. They're in Ardmore, Pennsylvania. And in this credit report for this fictitious company, we'll start to see data on that company. So let's say, for instance, the first part of your Experian business credit report will have basically profile information. So you have the address of the company, you have the phone number for the business. You also have the Experian BIN. The BIN is what's called the business identification number, and it's just a unique identification number for Experian profiles, so that Experian knows how to identify you or can identify you uniquely in their system. Also, if the company has any additional names or DBAs, this would be listed here as well. Any family linkage, and all that means is, depending on the organization, if there are any parent companies involved, any subsidiary companies, all of that information would be listed here. So on this left side is basically more so the the business profile type of information. And over on the right, we have some additional profile information in regards to the business and its industry. So, for instance, we have any key personnel, such as in this case, there's a treasurer, but also the CEO, typically would be listed here. Now, these two items here are very important. So we have the SIC code and the NAICS code. So SIC stands for Standard Industry Code or Standard Industry Classification. And it is a unique industry classification code for your industry. So, if you have let's say you have an auto dealer company, your SIC code would be specific for that type of business. If you have a lawn care company, your SIC code would be specific for that type of business. If you have a lending service, your SIC code would be specific for that. So in this particular case, the SIC code that best describes or this particular business, LaSalle Medical, is 8062. So you would have to go and figure out what your SIC code is, and you can go to the website and search through the SIC codes to find out which one matches your company. So based on what you enter into the applications when you're applying for credit with any of these vendors, typically that's what going to show here, and it basically gets information based on what's sent to it. So you'll actually start to get a profile once vendors start reporting to Experian and Equifax and Dun Bradstreet, and the SIC code will reflect. Same thing for the NAICS code, which is it's another classification system. It stands for North American Industry Code System, but it has basically a different number system, but still it identifies a standard industry classification. So in this one, this is basically the same as the SIC code description, but it looks like this is just more spelled out. So it's general medical and surgical hospitals. You may find between SIC and NAICS, there'll be slight variations in the same type of classification, but just know SIC has its own number system, NAICS has its own number system. And you need to know what your classification is in both systems, what your number is in both systems. Also, your business type, whether you're incorporated, whether you're LLC, whether you're a sole proprietorship. Well, ideally, you want to be at least an LLC, corporation, or an S corp when you're dealing with businesses and trying to get credit. Those are the ones that are looked on more favorably. Also, this tells you, when your Experian file was created. And so if you have been doing business for a while, you may be surprised that you may already have an Experian business credit report out there. You just never knew it, and of course never looked it up. So depending on how long you've been in business, you may actually have vendors that you're working with that have reported your business to Experian Business or Experian Commercial. So that would be one of the first things to do, is just actually go out to Experian Commercial and see if you have a profile out there that you can review. Also tells you how many years of data you have on file, or how many years of you've been on file with Experian. In this case, this company, they started out in 1977, and it looks like they have 41 years of data on file with them. So also years in business, more than 41 years in business. How many employees? Now, this number may or may not be accurate. Could be more of just an approximation. I would say, if your business has fluctuated in your employees, the big thing is, you don't want to have, 1 or 0 employees listed here. Obviously, the higher, the better. The more employees you have, it's looked on more favorably, like that you're actually employing people, and the lenders say, oh, okay, well, this is a legitimate business. But you want to try to at least have more than 0 or 1 employees, because again, it just looks better when you have more employees. In your annual sales, again, this number may or may not be accurate. Obviously, the higher the number, the better. If it were me, and let's say my numbers of employees and my sales were actually higher on my business credit report than they actually are, I won't complain. I would leave it just the way it is. And it apparently at some point, that this information was stated and came through on my credit report. If it's drastic, though, I would probably go through it, be a good business person, and maybe on my applications for credit, make sure that my income is stated correctly. But on the credit report, it's no big deal. Just count it as a mistake. That kind of works in your favor. Also, the filing data in terms of where you filed for your business incorporation, and also the date of the filing. In this case, it was Valentine's Day, 1971. All right, so this first section is more like the profile data of your company. All right, so then, once you get to the next section, you're kind of looking at the actual score. And so this is the Experian IntelliSense score. They use their own algorithm to determine what your score will be based on the information they have. And they rate you from a high risk to a low risk area. And so you can get more information about that by clicking on this little question mark. and it tells you how the numbers correlate to the risk level. So in this case, 1 to 10 is high risk, 11 to 25 is medium to high risk, 26 to 50 is medium risk, 51 to 75, we're starting to get in our green here, low to medium risk, and 76 to 100 is low risk. So in this particular case, we're at a 60. So we're classified as being low to medium risk. And so this gives you some additional information on how the score is calculated. So it's based on obviously your credit, your trade experiences, trade lines, things of that sort, how you've been paying. Also, if there's any public records or anything out there, any judgments that is factored in, as well as any demographic information such as how many years you've been on file, all that good stuff. So just something to keep in mind when you're looking at and evaluating your score. And when lenders look at this, they're always looking to, or vendors, they're always looking to work with companies that seem to be a lower risk because they're in the business to make money. And if you're a lower risk, then they can feel comfortable extending you credit. And obviously, here it says the objective of the Experian Business Credit Score is to predict payment behavior. So they're just trying to predict how well you're going to pay your bills in the future. And high risk means that there's a significant probability of delinquent payment. Low risk means that there's a good probability that the company will pay its bills on time. And also below that, you'll see like key score factors such as the number of commercial accounts with terms other than net 1 to 30 days, number of commercial accounts that are not current. So obviously, if you're not paying your bills on time, that's going to factor into your score. Number of commercial accounts with high utilization, meaning you're using, a large amount of the credit that has been extended to you, and of course the length of time you've been in Experian's credit file. And the scores range from 1 to 100, and of course, again, this company has a 60, so they are more of a low to medium risk. Not too bad, but again, that particular score just may have something in say maybe in your case, if you haven't had business credit for a while, it just may be the factor that you may not have been on Experian that long, and therefore you have a lower score. But the cool thing is that number could go up over time. Then you also have this financial stability risk rating. And we see here that the financial stability risk rating of 1 indicates 0.55% potential risk of severe financial distress within the next 12 months. So it's basically a calculation that kind of help predict the future about, whether or not you're going to be in business, over the next 12 months, right? So if we look at the question mark here, kind of gives us a little legend, kind of tells us where we are. So if you got a number of 5, that means this is a high risk business. 4 meaning medium to high risk, 3 medium risk, 2 low to medium risk, and 1 as a low risk. So there is if you have a 5, that basically means there's a high risk that this company could, be in financial distress, within 12 months. Obviously, we want to be as low as possible on that because we want companies to look at us as, we are a good business to do business with and extend credit because, we are, paying our bills and doing what we need to do in order to maintain our credit. So it says here also the Experian financial stress rating is calculated by a statistically derived algorithm. Basically means it's calculated based on a system that it created to determine risk based on multiple factors, which includes your trade lines, again, how you've been paying your bills, if there's been any collections against your company, also if there's been any public filings against your company as well. So again, it's just another way for Experian to show lenders how well your company looks to do business with, and that's pretty much it. So don't get caught off guard about that. Again, we see the key factors here, and obviously you can read that as well. So then we kind of get into the credit summary, and this is kind of where we see information in regards to the various trade lines, current days beyond term, and you can also click on any of these to kind of get more information on this as well. So DBT stands for days beyond term. It's basically the average number of days a firm pays its bill past the invoice due date. So the color of the predicted DBT is based upon observed norms of all U.S. businesses. So green is for all entries 15 days or less. So if you've paid, your bills 15 days or less after the due date, you're typically going to be in green. Yellow is entries if you pay your bills within 50 days after or 16 days after. It's going to be green. Orange is 51 to 90. Red is anything beyond 90 days, or not paying your bill for 90 days after the due date. Looks like they're saying that the norm, days beyond term, is about 7 days. Obviously, what I tell people is to, as soon as your invoice comes out, the best way to get the best score, as soon as your invoice comes out, go ahead and make the payment if you can. If you have to wait to the due date, that's fine. You're still going to get a good score. It's not going to be the highest score, but you're still going to get a good score. But just go ahead and make sure that you're paying by the due date. Depending on the company, because obviously you want these numbers to be as low as possible, preferably zero, right? So you want it to always say that, your current days beyond term is zero. And obviously, as long as it's closer to zero as possible, you're going to be in the green. In this particular case, this company is at 1, so basically they're kind of like 1 day beyond terms. Some companies actually have a grace period, and so if you pay beyond the due date, they may still report you as current, but don't use that as a crutch, because all companies are different, and more than likely they're not going to tell you if they do that as well. So it's best just to use that due date as a hard. Matter of fact, if you just want to, subtract a day from it, and instead of making it, let's say if it was due on the 24th, make it due on the 23rd, just in your mind, so that if you happen to forget about the 23rd, you can at least make sure the payment's made by the 24th, and get that paid on time. The average industry, so based on the industry, which is the industry codes that we talked about here, the SIC and the NAICS, based on the industry, looks like it's about 3 days beyond terms. But again, don't use that, as some sort of indication that, this is where, you should fall. Again, your goal should be to have these numbers zero as much as possible. Also, that gives you some information about the amount of money that you are using. Now, obviously, the higher these numbers are, this is what lenders use to determine how much credit they are going to extend to you, right? So if you're doing business, constantly close to around $10,000, between $5,000 and $10,000, you may have a lender that would be comfortable lending you a certain amount of money, maybe $15,000, maybe $20,000. Certainly maybe not like $1 million or something like that, because if you're not making that kind of money, then they wouldn't be likely to loan you that amount of money or extend you that much credit. So it's just how much money have you been dealing with. So your payment trend indicator, stable, meaning you're paying your bills on time. Lowest 6-month balance, basically, it looks like a $1,135,900 is the low. The highest is about 2.5 million, and the current total account balance about 2.4 million. And then the highest credit amount extended is about 3 million, and the median credit amount, meaning the middle value of all of the credit you've been extended, that middle value is about 115,000. So just something to keep in mind is, based on the amount of business you're doing, that could reflect in what these companies are going to offer you when you apply for credit. Then you also you have your payment trade lines, and this kind of gives you information on like what a trade line is. So trade line is a reported line of credit from one of your supplier's accounts. A trade line is sometimes referred to as a commercial account. So it's basically just one account. Trade line payment experiences can be used to recognize early, on time, and or late patterns. So it's basically a record of your payment activity, almost like your personal credit. And trade line payment experiences are listed by supplier categories such as credit card, airlines, office equipment, and generally the more trade lines, the more informative the payment analysis. So just kind of going back to this, one thing to keep in mind is that in your credit report, excuse me, in your business credit report, they're never going to show the name of the credit card company, right, that you have. It's always going to be this credit. It's going to say something like credit card. It's never going to show the airline company that your business is doing with. It's just going to show airlines. It's not going to show the name of the office supply store that you are doing business with. It's always going to say something like office supplies or office equipment, right? So that comes into play when you're trying to match up your purchase activity with what's reporting on your credit report. So just something to keep in mind when you are evaluating your business credit report. Any UCC filings, on your business, filings from companies. And again, you can get more information by just clicking on the highlighted area or text. And companies that extend secured loans to other businesses file Uniform Commercial Code. That's what that UCC stands for. These are documents with the appropriate Secretary of State, basically to protect their interest in the assets. So it's almost like they're kind of like tying, their extension of credit to your business assets. UCC detail, this is the detail of the actual UCC filing. The information generally includes the date, the filing number, jurisdiction, secured party, and collateral activity. And UCC summary is the number of UCC filings, but include the detailed information about each one. So it basically, typically when companies want to lend money to you, they will, create a UCC filing. Just kind of going back to the payment trade lines, looks like we have 66 trade lines that are reporting, and then UCC filings are 6. So basically it looks like we have 6 UCC filings where this company was lended money and a UCC filing was created. All right, and again, that UCC filing is Uniform Commercial Code. All right, and of course, any like trade lines and banking, insurance, and leasing, that information looks like we have 3 in terms of like detail for trade lines for that for this company. Looking at the business scoring worse, businesses scoring worse. So this is based on the industry. Looks like there are about 59% of the businesses in the industry that are scoring worse than we are scoring at our 60 for this company. So again, that's in the upper, the kind of like the mid, or low to mid upper, percentile for this company based on this category. Also, bankruptcies, looks like we have a green check mark, and basically these color codes, like yellow is just caution. Hey, look at this. Green is no problems here. As far as bankruptcies, there's no bankruptcies. Looks like we have some liens on this company, like 1. You can get some detail by clicking there. All it does is kind of just drops you down, and shows you the lien information for that. Looks like we have a judgment that was filed. It's another cautionary item. If we click on the detail, we see information about the judgment that was filed against this company. And again, just like with bad payments, I mean, things could happen. You could have a bad payment. If you do, when I mean bad payment, I mean like you actually paid beyond the due date. And, that's fine. If it happens, it happens. It happens to a lot of businesses. And you do have some leeway before, the number, before you get into the red area here. I mean, you could go all the way. Technically, you could probably go all the way up to 15 based on the color code before it actually starts turning red. But again, you don't want to be that, right? Same thing, and even though like any types of judgments, they are weighed more. Like if you have a judgment against you, if it's recent, it weighs more against you if the more recent it is. As time goes on, it starts to weigh less, but it is configured. It is calculated and used as a factor in computing your score. But typically, any types of judgment filings or anything like that don't fall off for 7 years. So you kind of have to wait 7 years for it to fall off. And if for whatever reason it doesn't fall off, then you can actually file a dispute with, in this case, would be Experian to have it removed because it's past the statute of limitations on this account. Again, tax filings, same thing. You may have one or two pop up, but again, if you're in business, I say do business. Go ahead and do business. Things happen in business. You're not totally out of water if, let's say, you get a judgment filed against you. Depending on the amount of it is, if you get a tax lien filed against you. In this case, looks like we have 2 judgments, 1 tax lien. If we go back up to our summary here, 1 tax lien, we have 2 judgments, and looks like we have some collections as well. We can look at that summary for the collections. We have 3 collections. I'm sorry, not 3. We don't have 3 collections. We actually have, we do have 3 collections, but these are the collections, right? So you have 2 accounts that are in open status that are collections, and then we have a closed account that's in collections. So again, going back to our summary here, and again, just some additional company background, but this is kind of partly of what the lenders pay attention to when they're thinking about extending you credit. They want to know how you've been managing your payment history or your payment experiences, and they want to know, okay, what are some actions that exist against you that could possibly, not necessarily, but could possibly interfere with you paying your bills on time. And of course, you have other charts and graphs in regards to your payment experiences, getting more detail, about how you pay your bills. If you're a chart person, these can come in very handy. And again, if you see anything that's underlined, you can always click that and give you more information about that in terms of continuous payments, newly reported payment trends, and combined payment trends. And also, and I pretty much, I guess that's pretty much it for the Experian credit report. So again, like I said, always check your credit reports. And a good thing to do with your credit reports is when you go in to take a look at your credit reports and you start to see, what is reporting on your credit report currently, try to use this to match up against what you have purchased recently. If you can match some of these payment experiences up to what you've purchased recently, then you would be able to track what is reporting to what, and you'll have a better understanding of what's reporting, how long it takes to report, and things of that sort. So again, it's one of the things where you really want to be able to track your business activity as it relates to the credit bureaus. All right, guys, and that was pretty much it. So just wanted to give you some insight on how to read this Experian credit report for your business. I would say always kind of go through and check your reports. If you are looking for a way to bring all of your reports in, I would say, sign up for NAV. If you go to nav.com/pricing. So for instance, nav.com/pricing. This gives you information about NAV. NAV is a platform that you can go to get all of your business credit reports brought into one place. You can get a summary only, for their free plan. So you can sign up for free. And looks like it'll give you also a full personal credit report just for Experian only. But if you're looking to get all of your business credit reports, If you sign up for NAV and you can get a summary for $0, I would recommend the Business Boost, simply because if you get the Business Boost, you'll get access to all of your business credit reports. Not only that, this Business Boost actually will get reported as a trade line for your business. And so just by signing up for NAV, you get like a free trade line. You know, every time you pay every month, this will report as a trade line for your company. And so you can scroll down and see, additional information you get. And you can see here, build business credit with trade line reporting. So again, with this Business Boost, you actually get a trade line, but also you'll be able to pull up all of your business credit reports, Dun Bradstreet, Experian, and Equifax. If you get the Business Loan Builder, the additional thing you get is the FICO Small Business Scoring Service, or SBSS. And this is a really good score that's used to pre-screen SBA loans, or Small Business Administration loans. But all that is banks, when they do business with various individuals or companies, they keep their own information. Well, if a bank wants to get information from other banks on the activity of a particular client, then they have to participate in this SBSS, which means they pay by offering information or giving information. And by doing that, they're able to collect information out of the network or out of the system. And they can use that information to compute another score for your business, so that it can be used by companies in order to generate a score, and used by, of course, the SBSS, or Small Business Administration, to compute a score and decide whether or not to extend your credit. So if you think this is worth it for you and what you're doing, you could do that. Otherwise, you could just do the $39.99 a month, which is what it is at the time of creating this video, and which is March the 12th, 2022. And you'll get a trade line as well as access to your business credit reports. All right, so that's it. Just wanted to kind of go through this Experian report with you and give you some more information about NAV and how you can view your reports. As always, continue to build that business credit. Really take care of your payment trade lines. And if you need any help, please feel free to give me a call. Prescott Capital, we help businesses all the time establishing their business credit. But if not, you can always check out our website and get information there. That's www.prescottcapital.com. And we also do direct funding. So if you're actually looking for funding for your business and you want to give us a call, we can help you get money for your company so that you can grow and scale your business. All right, guys, thank you so much. Again, hit that subscribe button, hit that like button, also hit that notification bell, and make a comment below. If you have any questions about any topics that you are looking to learn about regarding business credit or financing, please put in a comment below, and we'll be happy to help you out. Thanks, guys, and until next time, be prosperous.